You are most welcome to today's training about business plan writing. My name is Alan from Professional Writers, where we specialize in writing all kinds of professional documents. These include business plans, project proposals, professional CVs, research proposals, concept papers, and more. And today we are going to be looking at how to write a business plan. I assume that you've been following the updates that I've been putting in our WhatsApp group. But even if you've not been following them, it's okay. I am going to be taking you through the entire process of how you write your business plan. This is one of the most selling concepts in writing because it is one of the products that people need to do with writing. So now we want to ask ourselves one most important question. What exactly is a business plan? So a business plan, you will see that it consists of two words. We have what we call a business and we have what we call a plan. So a business is a venture that intends to make profit, while a plan is a step-by-step method of how you're going to run the business and get the profit. So that is what we want to be doing. So you'll see that there are so many people who are starting businesses and they always want to get this step-by-step model done, okay? So we are going to define a business plan more formatively as a comprehensive document that outlines the goals, the objectives, the strategies, and action plans for a business venture. It serves as a roadmap for entrepreneurs and business owners, guiding them through the process of starting, managing, and growing their businesses. So that is a more formal definition. But really, a business plan is this document that is going to outline how you're going to run your business, from how you're going to start it, from where you're going to get the capital, from how you're going to market it, and what profits you expect to make out of the business. So this is the document, okay? So why do we labor so much to write this document? So a business plan is written for so many reasons. I'll just mention a few here. But the most important reason for us to write a business plan is to attract investors to fund or invest in our business venture. So if every time you write a business plan, you're going to specify how the business is structured, how the business is going to make profits, and the amount of money that you need to start the business. So if investors are convinced that the business is a viable business, then they can come and invest in your business. The other reason as to why we write a business plan is to help us to set goals and objectives of the business, okay? Because if a business doesn't have goals, then it means that it is running in the wrong direction or there is no direction. So if we get the goals and objectives, it is good for us to write this business plan down. And it will always remind us that these are the goals and objectives that we're aiming to achieve. The next thing is the business plan is going to help us to manage the risks, because every time you do a business plan, you're going to think of all the possible risks that could affect your business. So if you have all these possible risks, it is easier for you to get ways and methods of mitigating the risks such that you can have a more viable business. The other reason is that it helps to clarify the business concept. Many people have business ideas, but they cannot sit down and conceive a business concept that can also be understood by another individual. So if you write a business plan, it helps another person understand your business idea in the same way in which you understand it. It also helps in decision making, because every time you have outlined the goals that you're going to follow, the goals that you want to achieve and the methods that you're going to follow, it helps you to make the right decisions every time you're running your business. It also helps in facilitating communication and collaboration, because you can easily give this business plan to another party instead of you going and explaining your business idea directly the way it is, because you might not remember everything. But if you write everything down, there is a very high chance of remembering everything and putting it in your business plan. So who exactly should learn how to write a business plan? Okay, so there are two things involved here. You could write a business plan for yourself, or you could write a business plan for another individual. Okay, so you could write, if you're writing it for yourself, you could be one of the following things. You could be an entrepreneur. Maybe you have a startup. There is a business idea that you have thought of. You have thought of the way you're going to start it, the amount of money you need, the amount of capital you have, and the kind of partners you need, how it is going to make profits. So that is more of a startup. Maybe it is a brand new idea. It is a brand new specific idea that you want to put out there. So you need to write a business plan in order for you to get financing from investors, because that is the document that you present to them and tell them that, hey guys, this is my business concept. So they will read it, and then they can decide to fund your business. You could be a small business owner who already has an existing business, but maybe you want to venture into a new product, or you want to upgrade your product or service. So it turns out that maybe upgrading your product or service requires maybe new machinery or new needs of capital, okay? And you need financing. So it is also an important reason for you to write a business plan, and you get financing. It can be from an investor, it can be from a donor, it can be from the bank, but they all need a document, which is in most cases a business plan. So you can also be a business manager. So if you're a business manager, maybe you're already managing an existing business and you also want maybe to venture into a new area, it can also be important that you learn how to write a business plan. You could be a marketing professional, because when you're doing marketing, you need to understand what you're marketing. So you have to understand your business to the dot. So if you're understanding your business so well, you can easily come up with a business plan and create the marketing section of your business plan that you will implement and help you get more clients, more sales, and more profits. The other person, you could be an investor. For you to be able to invest in other businesses, you must understand the core elements of a business. So if you learn what a business plan contains, it is going to help you vet the business plans and which business ideas are more viable than others. The other group, maybe you could be a student, like you're in MBA, you're doing entrepreneurship, and this is one of your assignments. So this training can also help you to learn how to write this business plan. The other major group is if you're writing it for another person or another company. So we will call you a consultant. For instance, at Professional Writers here, we are called consultants in writing business plans, because we write those business plans for other people. We don't write them for ourselves. Since we have the expertise of writing them, we write them for other individuals and companies that are in need of this service. Okay? So if you also learn how to write it, you can become a consultant and write it for other people. And you can see that there are so many people that I mentioned. There are so many groups of people that I mentioned up there. The students, the investors, the entrepreneurs, business owners, small business owners, startup founders, they are all in need of these documents. So if you learn how to write it, it is going to be a very good add to your skills. It is a good skill. It is a soft skill that you can write and do this thing anywhere, anytime, and you don't have limits at what you can do. So if you're planning on becoming a consultant, this is your training. So this training is going to cater for both parties. So even if you're doing it for yourself or you want to learn how to do it for another client. So if you're going to do it for a client, you need to have some kind of specialized skill, because your client is going to judge you a lot on what you're going to say before they actually give you the contract of writing for them a business plan. One, the amount of money that you're going to charge this client for writing a business plan is going to depend on, one, the level of expertise that you have, how you speak to the client, which is of course reflected from the level of expertise, because if you speak to a client, they will easily know your level of expertise, okay? Like for us, if you call us and you talk a little bit about your idea, we will help you expound it, and you will also know that the people that you're talking to are the right people for the job. And the other thing, how are you perceived by the client? If you're perceived by the client as a consultant, then you can easily charge whatever you want. For instance, if you come here at Professional Writers, we'll charge you anywhere from $100 to $1,000 for smaller projects or business plans. But if you have a bigger project, we'll charge you from $5,000 to $10,000. This is when you're starting projects which are going to cost multi-million dollars, because this business plan is going to be very comprehensive and we are going to be doing it physically. But if it is a smaller project, $100, $200, we discuss depending on what you want. So if you also want to be doing something similar, this is the training for you. You learn and you can be doing something which is in the same sense like we do. I want to talk about how marketable this soft skill is. So is it really required? At Professional Writers, this is one of the most demanding products that we give out to our clients. So many people ask us to write for them business plans. And the reason is simple. Every day, people are thinking of new businesses. People are thinking of ways of bettering themselves, bettering their lives. People are thinking of getting loans every day. And when they go to the bank and they want a business loan, they are going to ask them for a business plan. People are thinking of how to get financing for their businesses, maybe from donors, or maybe from companies around their areas, or maybe from friends. And they're asking them, present something, some people call it present a proposal, but it's actually a business plan. So present a business plan. So people don't know how to do these things. So if you are one of the people who wants to do this, this is the training for you. And if you're a person who wants to learn how to do this for other people, this is also a training for you. For us at Professional Writers, we get at least 5 orders a day for business plan writings, and we get so many people consulting us about business plan writing. So if you position yourself so well, you could get even far more than what we get here. Now, let's go ahead and look at the contents of an actual business plan. So you will realize that writing a business plan or writing any document whatsoever, it is more of knowing what you're going to write than actually writing it, okay? Because you cannot write what you don't know, isn't it? You have to know what you're going to write before you actually writing. Actually, writing itself is easy. If you know what you're going to write, you just put it down. And nowadays, it is no longer writing because people just copy from the internet and then they paste. Okay, people copy from artificial intelligence and then they paste. The biggest challenge that we are getting right now is that people think that if they know how to copy and paste, they actually know how to write. And this is something that happened even to me when I was starting out, because when I just went to the internet, read about the contents of a business plan, and then I thought, wow, this is easy, I can easily do it. But only to do it, and then it was very unsuccessful. So if you want to be successful, you need to learn the core principles of business plan writing. You don't need to cram the contents or this should be this. No, you need to understand the core principles from first principles, what exactly the business plan is going to entail. Because if you understand from core principles, you'll get another client who will tell you that my investor has only told me to write about these contents only, okay? So you'll know what to write there. Or the bank has only told us to write about the financials. Maybe they only want to write for us to calculate the payback period, okay? And then you don't have to write the rest of the business plan. But if you only crammed that this is what it is going to entail, then it is going to be a problem. So now let's go ahead and start to understand the contents of a business plan. So the one and most important thing is that you have to have a business idea. So if you're writing a business plan for yourself, you need to have a business idea. So if you have a business idea, the business idea is the one that we are going to grow and expound on. If you do not have a business idea, or if you are writing a business plan for a different person, then they need to sit with you. They explain to you their business idea in detail such that you understand it so well and you write a business plan. So you realize that writing a business plan, you already know what you want, and what you're doing is more of organizing the information. Every time you find yourself writing a business plan and you're on the internet trying to get information from the internet, that means that you're writing a poor business plan, because the information that you're getting from the internet is already known. And remember, you're telling us that your business idea is unique to you and maybe to your area. So it means that the information should come more from your mind than it should come from the internet or from artificial intelligence or from any other platform. Okay, so now the first component of a business plan, we are going to look at a total of 5 components of a business plan. Let's start with the first one. The first one is what we call the company description. Other people call it the business description. So we are going to be learning about what is contained in the company description section of a business plan. And when we know what is contained there, it will be easy for us to write, because writing is just getting what you know from your mind and putting it on the paper or on the screen. So the first thing we're going to be looking at is your company name. So when you're writing a business plan, under the company description section, you're going to write about your company name. A company name should not be a haphazard word that you just come across. It should be named depending on something. And we can name your company depending on the location where you operate from. Okay, maybe you can name it depending on your country or your county or your district. An example is if you see something like New York Times. It is a news channel, I think, but it reports about news everywhere. But I think it is situated in New York. That's why they called it New York Times. So you can name it according to the place. I have seen companies like Nigerian coffee, something like that. So they are naming it depending on the location where it is. You can also name your business depending on your names, the names of the proprietors. If you're starting the business alone, you can name the business your name. Some examples are businesses like Tesla, named after Nikola Tesla because he's the owner. Businesses like Benz, that guy was called Benz, the person who started Benz. Businesses like Hewlett & Packard, which they call HP, this company that makes computers. It is called HP. So it was started by two people, Hewlett and Packard. So they call it HP. They named their business after their name. So you can name your business also after your names. It's okay. You can also name your business after your using the product that you produce. Some examples are things like Pizza Hut. This company that deals in pizza. They name it Pizza Hut. So someone hears it and they know there is pizza here. You can also name it. Another example is like Malaysian Airways. If someone hears Malaysian Airways, they can easily know that this is an airway. But other times you can have unique identifiers which are only unique to you. Okay? Let me give you some examples of such businesses. Now look at Google. What does Google mean? It doesn't mean anything. It is an acronym for nothing. It is not even an acronym. So these people just wanted to have a unique identifier for their business. Only them know what that means, okay? Things like Microsoft, okay? So you can also name your business with unique identifiers if you want. So that is the first component of the company description. The second component of the company description is the business structure. So the business structure is the legal framework under which your business is going to exist, okay? So a business can exist under so many legal frameworks, but some common examples include sole proprietorships. This is when you and only you are the boss and the everything of the business. So you're the owner of the business. The business, you take all the liability of the business. That is sole proprietorship. You can also have a business structure which is called a partnership. That is when you're starting a business with your friends or with another person. So you can divide the responsibilities. Maybe you also divide how you're investing. And this is called a partnership. Another business structure can be a corporation. This is when you have so many other people who are shareholders in your business. So they have advantages and disadvantages of each business model. So you need to understand where your product or service would benefit most. For instance, if you say you're going to run a sole proprietorship, some investors might say, this guy is going to run a sole proprietorship, which means that everything is on him. Okay, what happens if he dies? He dies with the business. So they might be a bit, hesitant. Okay, but then if you say you're going to do a partnership, some investors might say, if you're doing a partnership, then there are problems that are associated with the partnership. For instance, there is dividing of profits, which other people don't want. There is always lengthy decision-making procedures because you have to talk to all the partners before you decide, and all other problems. So we need to understand the advantages and disadvantages of each before we decide on a business model. The other thing is, the third component of the company description section is the company's vision, mission, and the core values. You need to understand what are your company's mission, what is your company's vision, and what are the core values. So a vision is like the long-term goal, which is sometimes not even achievable. You would say maybe you want to maybe implement, you want everyone in your country to have, for instance, if you say, I want everyone in my country to have access to free computers, maybe, okay? And maybe the business that you're doing, you're going to be manufacturing computers, and then maybe you're going to be selling them to the people, to the government, which is going to buy it on behalf of the people. So it might be very impossible for that to happen, that everybody in the country has it, but that could be your long-term goal. Like for Google, they said their long-term goal is to make sure that everybody has access to free, instant information, and probably they have achieved it. So the mission is how you're going to, the step-by-step model of how you're going to achieve the vision. So depending on the vision that you have set, you also set a mission that is a step-by-step model of how you're going to achieve the vision. So the core values are the values that your company is going to stand upon. Maybe you could say we are going to be to stand upon integrity. We are going to be integral in doing our things. Maybe you say we are going to be innovative. Okay. So any values that you think your company is going to be using or standing on, they are going to be important here in the company's core values. So that is the fourth one. So the fifth one under the company description section is the company history. So we need to understand how the company has started. So you can see that now this happens in two ways. You could have an existing business, like the example we talked about. If you are a small business owner who wants to venture into a new business, that means that the business is already existent. So what you have to do is you have to explain the history of the existent business and why you are venturing into the new product or the new service. However, if you do not have a business yet, and it is still an idea, you're going to talk about how the idea was conceived. Maybe you want to start a company that manufactures sanitary pads, and then you have been in your community and you have seen that girls are suffering with sanitary problems. So that is the history. So you talk about that, and it is going to inspire your donors your donors and your investors to donate to you and put in your business. And then the sixth component is the location. You're going to talk about the location of your business. So we choose location depending on various factors. The number one factor is maybe locating your business near the talent or the human resource. So we want to explain why our business is located in a certain region or area. The first and number one reason is you could locate your business near talent or human resource. Maybe I have seen Chinese companies that come here to Africa and they exploit the cheap labor that is there because it is very cheap. They will get their companies from elsewhere and they bring them to Africa. And then they are going to exploit the cheap labor that is there. That is a strategic decision. So you have chosen that location because there is very cheap labor. Or there are people who are talented in doing that, okay? And then the other thing that you look at in location is, are you near the raw materials? There are businesses, maybe when you're going to manufacture something and you position your business near the raw materials. So if it is nearest to the raw materials, it is easier for you to easily pick the raw material and create the products. It could also be that you're positioning the business near your clients. So whatever reason, there has to be a very good reason as to why you're positioning the business, where you're positioning it, and that is the location. And this is what we write about the location. You write and explain why you are positioning the business, where you're positioning it. Never write that you're positioning the business there because it is your area of residence or it is your home area. No, it has to be a strategic reason. The other thing that we are going to look at under business description writing is the organization and management. So this is where we go ahead and draw an organogram to show the structure of hierarchy of the business. We could say maybe that we are going to have the board of directors up, the executive directors, and then the other people as you go down. So that is the first section of your business plan. We have said that the first section of your business plan is the company description section that other people call the business description section. And it contained 6 elements. One was the company name, the business structure, the company's vision, mission, and core values, the company history, the location, and organization and management. Okay, so you can now clap for yourself that you already have the first section under your belt. So we are going to look at the next section of your business plan, which is called the market analysis. So what exactly is the market analysis? So every time you have a business idea, it is as useless as possible if you do not have an existing market for it. So even if you have a very good product, but if nobody is going to be buying it, then it is not useful to anybody. So we are going to analyze the market and see how is that market standing. The first thing we are going to do is to do an industry overview. So what exactly is an industry overview? Every business belongs to a certain industry, and there are so many industries of business. We have industries like agriculture, we have manufacturing, we have IT, we have construction, we have so many businesses, education, tourism. So you need to understand which industry does your business belong to. Okay, so if you understand the industry which your business belongs to, now we need to do a literature review and understand the trends and forecasts of that industry, both in 3 aspects. We are going to try and understand how that business is doing globally, how it is doing at continental level, and how it is doing at national level. For instance, if your business is in agriculture, we need to understand how is agriculture doing globally. So this is now where we utilize the internet and other important sources, and we try to search and say, how is the agriculture sector standing globally? So how many people are employed in agriculture? What profits does it make? How does it contribute to the GDP? And we also create the forecasts. Okay, what is going to happen in the near future in the agriculture industry? So all this is important. And we do this on a global scale, and then we come to the continental level. For instance, if you've come from Africa and you're doing a continental industry overview, it means that you're going to talk about agriculture in Africa. So you also do a literature search and get this information. And then you go down to the national. This is where you talk about your country, where the business is going to be existent. So you talk about this business, how it is performing in that country. So this information can be got from the Ministry of Agriculture, for instance. If you have it, you go and get the reports from the Ministry of Agriculture of your country, and you can incorporate this information in this section. That is the number 1 thing under the market analysis. Number 2 under market analysis is what we call the target market. Who is your target market? Who are you targeting? And we are going to be discussing the target market under 3 aspects. Number 1, what is their demographics? And demographics is the component of the individual. What is their age? Okay, maybe the product you're making is for only people between 18 and 25. Okay, maybe you're making a perfume, or maybe you're making a certain software, maybe you're making a children's game. So there is always an age bracket that is going to consume your product or your service. We need to talk about them in detail. We are also going to talk about the gender of this target market. We are going to talk about the income level of this target market. We are going to talk about the education level of this target market. We are going to talk about the marital status, and we are going to talk about the religion. You can also talk about any other thing that you want. But mostly we want to understand their income levels, because if their income levels are the ones that are going to be the determinants of their purchasing power. If they have some income, it means that there is a very high chance that they are going to be buying product or service. The next parameter under target market is we are going to be looking about the behavior of your people. So behavior is decision-making. Who influences their decision-making? There are people whose decisions are influenced by other people, okay? Maybe there is a married woman who wants to buy something, and they have to ask their husband. So you need to also understand who influences decision-making, such that when you're doing your marketing, you also incorporate that aspect of the influencer of the decision-maker. And then you also have to understand the usage patterns of these people in case they have similar products. How do they utilize these products? That is their behavior. The other section is their psychographics. So psychographics means this is personality, this is lifestyle, these are values and beliefs. Okay, what is their personality? What is their lifestyle? Are they do they like extravagancy? What do they believe in? All those are psychographics, and you have to incorporate them also somewhere in your business plans. Okay, so that is the target market. We have divided it into demographics, psychographics, and behavior. The third thing that you're going to talk about in target market and in market analysis is customer needs and pain points, because it is probably possible that your clients, the people who are going to be your clients, are already solving the problem you want to solve for them with another product, maybe with another service. What pain points do they still face while they're using those products? Maybe they could be poor customer service, maybe they could be high prices, maybe they could lack product availability, and these are the gaps that you're going to be closing. So you're going to be talking about all these things in your business plan. The fourth thing we want to talk about is the barriers to entry. So we want to understand the business industry, like we described it earlier, and then we understand what barriers are there to entry. Barriers to entry could be things like the high startup costs, like economies of scale, like legal requirements. There are countries that have terrible legal requirements for you to start a business. There are countries that have very high very high taxes. Okay. So those are some of the barriers to entry. And then you can talk about regulation as the fifth factor under market analysis. What regulations are there? You can look at tax laws and regulations, employment and labor laws, intellectual property laws, and these are all incorporated in the regulation sector of the business plan. Because if you start a business without knowing what regulations are there, then you might not actually be able to convince your donors and investors to actually invest in your business. The sixth component that we are going to talk about is the competition analysis. So you're entering a market that already has people that are working in it. So how are you going to compete? Okay. So we are going to be looking at things like the competitors' product offerings. What are they offering? And what are we going to offer different that is going to be better than what the competitor is already offering? The prices, we are going to be looking at the pricing. What pricing strategies is the competitor using, and what are we going to use to make sure that we beat the competitors? The distribution channels, what distribution channels are they using, and what can we use better? So this is a competition analysis that you do in your business plan. So the seventh thing is the risk analysis. There are so many risks that are involved in starting a business. Okay, so we need to understand and describe market risks, operational risks, and strategic risks. So if you already have a business idea, you can think of what market risks can happen in your business. And then the eighth component is what we call the SWOT analysis. So the SWOT analysis is when you talk about strengths, the weaknesses, the opportunities, and the threats that are in your business. So that is the second component of your business plan. And we say the second component of your business plan is the market analysis. And it has around 9 elements. It has the industry overview. It has the target market analysis. It has the customer needs and pain points, barriers to entry, regulation, competition analysis, risk analysis, and SWOT analysis. You can clap for yourselves again because you have put the second section under your belt. Now let's move on to the third section. The third section is the marketing and sales strategy. So now this is where we are going to be talking about how you're going to actually sell your product. So now, since we have analyzed our market, we understand who our client is, we are going to design a marketing strategy that complies with the analysis that we made earlier on. We now understand the age of our client. We now understand the purchasing behavior, the income levels, where they come from, their education level. So we can easily craft a marketing strategy that addresses their problems. So the number one thing we are going to do is understand marketing and sales strategy. We are going to talk about what we call the 4 Ps. The 4 Ps include the product, the price, the place, and the promotion. So product, we are going to be talking about our product. We are going to be talking about product development, product design, product quality standards, and we are going to be explaining each and everything about our product or the service. For instance, if the business plan was for professional writers, we'll be talking about the different services that we offer, business plans, research proposals, concept papers, all those. Then the next thing that you're going to talk about is the price. How are you going to price your products? So there are majorly 3 types of pricing. We have the first one called cost-based pricing. So cost-based pricing is if you get the amount of money that you have invested in a business, and then you also understand the amount of profit you want from that product. And then, for instance, if you've invested $100 in the business and you say, I want a profit of $20, you will put up the profit of $20. That means the price of your product will be $120. So that is cost. You're costing what you invested in and also adding a profit. And then you come up with a price of your product. That's cost-based pricing. And then we have what we call value-based pricing. So value-based pricing, it means that the product is priced depending on the perceived value of the client. Like these luxurious products, you have seen these luxurious watches, luxurious cars, luxurious bags and clothes. They are not very, it is not that manufacturing them is very expensive, but people have attached a certain value to them. So they are very, very expensive. That is value-based pricing. We also have what we call competitive pricing. So competitive pricing is when you price your product depending on the competitors that are selling a similar product. For instance, if you're selling gasoline, this fuel for the cars, and you see that all the petrol stations and the fuel stations are at a certain pricing, it is very difficult for you to change because then you will not get clients. So you also have to move within that range. So that is the price. Then the third thing we're going to be talking about is the place. So the place means that where are the clients going to find your product or your service? Are they going to find them in retail stores, in e-commerce platforms? Are they going to find them at wholesaler or distributor shops? Where exactly are they going to find them? Okay. So you also have to explain that part. Then the other thing is the promotion. How are you going to promote this product? We could talk of things like social media advertising, email marketing, influencer partnerships, and all the other forms of promotion. The fifth element in marketing and sales strategy is the competitive strategy. So we did a competitive analysis up there. So we now need to come down here and explain what competitive strategy are we going to employ, okay? What is that unique value proposition that we have in our business that all our competitors do not have? And that is what we are going to explain in that section. So you have learned that the third section of a business plan is the marketing and sales strategy, where we explain the product, the price, the place, the promotion, and the competitive strategy. So you can clap for yourself because now the third section of your business plan is already under your belt. Now let's go to the fourth and most important section of your business plan, which we call the financials. So the financials, this is where we are going to be explaining all the money that is going to be involved in the business, both the money that we are going to invest and the money that we expect to get out of the business. Let me just share my screen such that you get this very well. Okay, so when you look at this, these are the financials that I wanted to show you that we put in one of the business plans that we were writing. So we are going to look at 6 financials. One is the revenue projections, projected income statement, projected cash flow statement, projected balance sheet, funding requirement, and investment appraisal. So let's first look at what we call the revenue projections. So revenue projections mean that this is the amount of money that you anticipate the business to generate. This is the amount of revenue that you anticipate the business to generate. This is not profit, but revenue. So how much do you think the business is going to generate? You can do revenue projections for 3 years, the first year, the third year, and the fifth year. Or you can do the first, second, third, fourth, fifth, but mostly first, third, and fifth year. We want to always understand how the business might perform in the first 5 years. So you can see that I made a very simple revenue projection here for a business plan about poultry in agriculture, selling eggs, poultry meat, chicken droppings. So you depending on the pricing model that you have chosen earlier, you put the product, the price, the projected average number of monthly sales, and the projected monthly revenue. That is going to help you understand and calculate the projected annual revenue. So this is the amount of money that your business is going to be making every year. So here in this example, you can see that we think that the business is going to make 150,000 from eggs, 200,000 from poultry meat, and 5,000 from chicken dropping. So we calculate a total and come up with that. Same for the third year, same for the fifth year. So this is just an assumption. But this assumption is not just made from heaven. You have to have understood the pricing model that you have chosen. You must have understood the industry overview that we made that is going to help you come up with all these prices. Okay, so that is the revenue projections. The other financial that you're going to need is what we call a projected profit and loss statement. Even if you're not an accountant, you can easily come up with this kind of statement. So the projected profit and loss statement, as the word sounds, it is going to show us the profit and loss that the business might make. So in this statement, we are going to start with the revenue that we anticipate to make for the first year, for the third year, and for the fifth year. And we'll have the total revenue from all the products that we have. And then we shall subtract the cost of goods. Because every time you do a business, you have goods that you have bought. So we subtract the cost of goods. For this example, we bought chicken feed, chickens, veterinary medicines, feeders, waterers, and we have a total here. The total amount of cost of goods sold. So we are going to subtract from our revenue. So we get the cost of goods and we subtract it from the revenue to give us what we call a gross profit. And then you'll realize that this is not actually the profit because there are more expenses that are coming off. We have what we call operating expenses. So operating expenses are those expenditures that happen as you run the business, like administrative expenses. You're paying salaries, you're marketing, you're paying insurance, maintenance costs, those things. They all are called operating expenses. So in this example, we had our operating expenses at 65,000. And that means that we have to subtract the operating expenses from the gross profit from this to give us a net profit before tax. This is what we call a net profit before tax. So now we need to also understand the taxes that are involved in your business. That is why it was very important for you to understand the regulations up there. So in the regulations in your country, you need to understand the country of operation, what taxes are involved in your business. So we have to also subtract them such that we come up with a profit of 96,000 in this example. So you'll see that out of the revenue that we said we would make of 355,000, we have only managed to remain with 96,000. Okay. So that is how you calculate. And you do that for the first year, for the third year, and for the fifth year. Then the other financial statement that you need is called a projected statement of cash flows. So cash flows means how money is coming in and getting out of your business. And there are 3 ways in which money comes in and gets out of your business. It can come in and out of your business by operating activities. In this example, we can have like cash received from sales of eggs, cash received from poultry meat, maybe from chicken dropping. That is all inflows, cash coming in. And then when you pay out money on operating activities, things like payment to suppliers, payments to veterinary services, those are all outflows. So we subtract the total of outflows from the inflows and we remain with the difference. No? So we remain with the amount of money that we have. So that is the difference between the inflows and the outflows. So the other way is investing activities. So investing activities are these activities that you do to invest in your business. Maybe you purchase a new poultry house. Maybe you purchase a new vehicle. Maybe you do research. So those are all things that you're putting in the business. So you have to also include them in your cash flow statement. The other thing is the financing activities. So financing activities, this could include money, maybe that you maybe money that you get from loans, maybe investments that you get, like the one that you're going to get after you write your business plan, the grants received, and any other investment that you might get. It is all recorded there. Then the other financial statement that you're going to need is a balance sheet, where we are going to balance the assets, liabilities, and the equity. So when we balance, we need to make sure that the total amount of assets is equal to the total amount of equity and liabilities combined. So this is also a projected balance sheet. Now, the most other important financial statement also is the funding requirement. So funding requirement, we are going to be looking at the capital expenditures. So capital expenditures are those things that you buy that you might not need to exchange easily. Like for instance, if you buy land, if you construct your poultry house, if you buy feeders, if you buy incubators, these are things that you're not going to replace again and again. So they might take some time before you replace them. So those are called capital expenditures. In most cases, it is also abbreviated as CapEx in accounting. So we also have what we call operational expenditure. So you have to put all these here and there, and then we shall have all the operational expenditures here, depending on the operations that you're going to be running. In this example, you see that we have poultry feed, we have labor costs, we have utility expenses, and they are all under operational expenditures. So we are going to have a grand total. And when we have a grand total, this is the amount of money that we are going to be expecting our investor to give us. And the investor has to see all these details before they can invest. Now, we need to also do what we call an investment appraisal. So an investment appraisal is when we are guiding the investor into understanding how viable our business actually is. So doing an investment appraisal, we are going to start by one of the most important parameters that we call the net present value, or the NPV. So to just give a small explanation about this is that we have what we call present value. So you'll all attest to me that every time time passes, the value of money reduces, okay? You just take a look at the room where you're seated right now. If you're renting it, how much money do you think it was rented 10 years ago? It was probably less than what you're paying now. And how much money do you think it will be needed for you to rent it 10 years in the future? It is probably more money than what you're paying now. So it means that every time we go to the future, the value of money actually reduces. So we need to calculate the present value of the future money, okay? So if, for instance, we are talking of $100 right now, how much will $100 of 10 years time be worth, okay? So you realize that it is probably going to be less. Maybe what you can buy with $100 right now, you'll not be able to get the same amount with $100 10 years to come. So our investor needs to understand the present value of the money. So now we can do, using some of these simple formulas, we get what we call a present value using this formula. So present value is cash flow in a given year. We did the cash flow statement up there. And then we shall say R is the discount rate, the rate at which that business grows. It is also called a discount rate. So you'll see that mostly the businesses are growing at around 10 to 15% if it is doing well. So we always take an average of 10% as a discount rate, and T is the year. So we are going to calculate the present value like this. So this formula is the same as this formula. And then we are going to subtract the initial investment. So in this example, you will see that we do for year 1, year 3, and year 5. And then we do the projected cash flows out of 1 plus the discount rate. And then we get this value. So this means that 364,000 of today is equivalent to 364,000 after 1 year is equivalent to 330,000 of right now. Okay, so the money in the future is going to cut value. So you will see that $500,000 of 5 years time is equivalent to only 300,000 US dollars right now. So that is what we call a present value. So after doing the present value, we are going to subtract the initial investment, and we are going to get the total present value here. And then we are going to get the total present value minus the initial investment, and we shall get a value. If you get a value which is positive, that means that your business is going to generate profits. Okay? So if the business is going to generate profit, then it is a good investment even for the investor. So we need to calculate these values such that we guide our investors into making the right decisions. Okay? So we are going to move on to the next one that we are going to call the internal rate of return. What exactly is the internal rate of return? So the internal rate of return is a discount rate that makes our net present value equal, of the net present value of all cash flows equal to 0. So this is also going to help us calculate a discount rate. So the internal rate of return is that discount rate at which the NPV is 0. So we are going to just use the same formula as above, and we are going to put 0 this side, and we are going to come up with a discount rate. So when you get a certain percentage, it represents the rate at which the business is going to be returning profit. So if you have something like 22.5%, when the average is 10 to 15, that means that this business is going to be a very viable business. Then the next indicator that we're going to talk about is the profitability index. It also helps the investor understand if your business is actually profitable. So the profitability index measures the ratio of the present value of future cash flows to the initial investment. So we shall just get the amount of money that we anticipate to make, and then we divide it with our initial investment that we are asking for, the one that you saw up in the total of the capex and the opex. So we get 1.14, and if the probability index is greater than 1, that means that the business is a viable business. If it is less than 1, then you have to tweak the figures a bit such that you come up with a good business. And that is all with the financials of your business. Okay? So now that was the fourth element, and we looked at the revenue projections, projected income statement, projected cash flow statement, projected balance sheet, the funding requirement, and the investment appraisal. So the fifth element that we are going to look at in our business plan is what we call the implementation plan. So implementation plan is going to involve us understanding how we are going to implement what we are saying we are going to do. The first thing we are going to do is create a Gantt chart. So a Gantt chart is just a graphical representation of what is going to happen when. So we put the activities on one side, and then we put the time of when we are going to implement each on the other side. And then we show exactly when we are going to implement which activity. And then in the implementation plan, we also talk about the environmental impact and the socio-economic impact of our business. Okay? And that is the fifth section. So you have learned that the business plan consists of 5 sections. And the 5 sections will include the company description, the market analysis, the marketing and sales strategy, the financials, and the implementation plan. So anything that is going to talk about business plan writing is going to play around those areas. And you will find that in some cases, you could have an investor who only asks you for a specific component of the business plan. So you don't have to write all. And also, depending on the nature of your business, you might not need all the sections. Okay. Now, after you've written your business plan, it needs to be formatted. So formatting means you professionalize it now. Like we create a cover page, which is a winning cover page, which is a very beautiful cover page to attract the eye of the investor. We create a table of contents. We number our pages. We include some pictures, and we do right fonting. We do the shapes and spacing such that it is a readable document. So in brief, this is what you'll need to know in order to come up with a business plan. I know it might sound a lot, especially when you're just starting out, but if you give it time and take it slow, you'll see that you can easily come up with a business plan. And I am telling you that if you master this skill, you're going to make a living off this skill, only this skill, because so many people there are in need of business plan writers. Now, as we conclude, I want to talk about our master coaching program. So this master coaching program is a more practical session of how to write the business plan from scratch. We have organized a coaching program, which is a 7 days full body training where I'm going to walk you through the nitty-gritties of writing a business plan. In this entire coaching program, we are going to do it for 7 days. As I said, we are going to be meeting for 2 hours every day, and we are going to be discussing. First, we discuss the theory part together, and then I give you a practical session or an assignment that you're going to do practically every day. So we take it step by step. So after you do the assignment, we look at it and we learn from scratch as we learn together from the nitty-gritties of writing the business plan. The advantage is that by the time you finish the entire coaching program of 7 days, you'll have written a fully-fledged fundable business plan. Not only are you going to learn how to write the business plan, but you are going to sit for an examination, which is going to be 100 multiple choice questions. And we are going to mark it, and it is going to also reinforce your learning in about business plan writing. You're going to submit that business plan that you'll have written such that our team at Professional Writers reviews it and recommends changes, maybe what you should change, what you should improve, such that you understand the common mistakes that people make while writing business plans, even the learners, such that you can improve them on the future business plans that you'll be writing. It is very important that you learn how to write a business plan, especially if you're an entrepreneur, because entrepreneurs always have new business ideas, and you're not going to be hiring people every time to write your business plan. And by the way, you might, even if you say you're going to hire, how do you even know that the business plan they have written for you is a good one? So it is good that you learn how to write it yourself such that you can do it for all the future business ideas that will ever come up in your mind. So within still this course, we are going to give you a certificate, okay? That certificate is going to be from Professional Writers, but it is only going to come after you have passed our examination and after you have submitted a fundable business plan. This model is so good because if we are learning together, it is easy for us to be on you, because if you're learning at your will, you might be lazy a bit. You might say, I'll do that tomorrow. But if we are learning together as a group, we are saying that we need to graduate in 7 days from when we are going to start. So we are all going to be learning together in this coaching program. So after you have written your business plan, we put it in our repository. We have a Professional Writers repository where we put these business plans, and potential funders can come and read them. And if your business plan interests them, probably they might want to fund your business plan or your business idea. So we just put it up there. But of course, before we put it up there, we will have vetted it to know that it is at the right standard. Not only investors, maybe also people who need business plans to be written for them. They can also come and see the business plans that you have put up there. That's if you want your business plans to be in our repository. But if you don't want that, it's also fine. And then we shall also graduate together, and you're going to become a consultant in business plan writing. So if you're interested, we are going to create a new WhatsApp group for people who are interested specifically in taking this coaching program. This is a paid coaching program. It is not free. And we are paying for it because it is going to involve a lot of our time, because my team and I are going to be with you, learning with you every day, looking at what you're doing, looking at your assignments, looking at your business plan, creating for you certificates, graduating with you. And this is a paid program. So we are going to learn starting from Monday up to Saturday, and Sunday is going to be our graduation day. And we are going to, in order to maintain the quality of the coaching, we always maintain a very small number. We don't want to have very many people because we don't have also a big team. So if we have a few people, it is better. And we always limit our number to 20 learners. Okay. So that means that we are going to use the first come, first serve method, where the first 20 people who register for the coaching program are the ones that are going to be considered. If you come after the 20 people have registered, it is going to be very difficult for us. So if you are really interested in joining this coaching program, which is a practical one-on-one training, then you need to come and join this. You just go down in the bio and register. I have put the link down there. You're going to register and we will put you in. What does this course cost? Normally, this course costs $200, but I have decided that we give a 50% discount for people who are going to join immediately, people who are going to join between 24 hours of seeing this training. So those people who are willing to join within 24 hours of viewing this training are going to be given a 50% discount. That means that they are going to register as soon as they finish watching this training. But if you come later than 24 hours, then you will pay the $200 for which the course goes. So now, if you pay early, it is going to help us to plan, and we will know the actual number of people that we are going to be dealing with, which will help us to strategize and restructure more of our resources. So many people have benefited from this program. There are so many people. One time I'm going to call Leonard from Botswana, who called me the other day that he had won $25,000 for his investing in his business. It's about environment, I think growing trees and whatever. So he's very happy. So you could be one of the people who benefit from this program. I also have so many other people that have benefited from this course as consultants. They have learned how to write, and now they're writing it for other people. We are so sure of this coaching program that we have even made a money back guarantee. If you start with us and then midway you feel like this is not working out, this is not good, it is not what I expected, we are going to give back your money. All your $100, we give it back. We don't remain with a single coin. That is if you tell us midway in the course, and we shall enroll you, and you will what? You will go. We have put this money back guarantee because we are very sure that you are going to like this course. Okay. So now, if you're interested in joining this program, it is a paid program. You're going to pay $100 for it. If you're interested, please join our WhatsApp group. I have put the link in the bio, and also register with using the link that I have put below. So when you register, we are going to send you an email address with the instructions on how to make your payment. Every time you're registering, I always ask you for your WhatsApp number, such that in case you have problems, we can help you process your payment directly. Maybe the payment method that we have, maybe you don't have it. We always help you out with that, and you can process the payments easily. So from there, I promise that if you join our coaching our coaching program of business plan writing, you'll have the skills that you'll need to either become a consultant or to write your own business plan. Thank you so much for attending this program. And thank you so much for being on this training. You're going to have so many similar trainings. People who are interested in business plan writing, even if you're not ready to enroll for the course now, please join the group. I am going to continue posting information about business plan writing in the group, and you'll keep learning. And also people who are interested in joining this premium program, we are going to be discussing everything that we learn about in the group. For instance, after we have done our 2 hours of theory, I give you the assignment, we come to the group, we discuss it together. If you have a problem, you ask in the group, we learn together, and this group is open. Everybody can comment, they can put up what they have written, we can advise each other, and we can improve and become consultants together. And it's also important that us as professional writers, we are trying to do a global reach. And if you're really good at business plan writing, who knows, you can work with us if you want, such that you can be our ambassador and representative in your country. That is, if you have demonstrated that you have the skills. Since we have so many orders of business plans, we can be issuing some of them to you, maybe those ones coming from your country, such that they don't have to come a long way to us. So thank you so much. Let me see you in the group, and let me see you in the premium program. Thank you, and see you there.